April 17th, 2026. Federal agents knock on a door in Potomac, Maryland. Another team knocks on a door in San Jose, California. Same morning, same company, same charge: fraud. Prosecutors say iLearningEngines fabricated more than 90% of its $421 million in revenue. They say $144 million simply went in a circle. The CEO walks out in handcuffs. 2 years earlier, he rang the NASDAQ bell. Same date, different soundtrack. April 17th, 2024. Confetti, cameras, a balcony full of people cheering. Ticker, AILE, 4 numbers. $421 million in revenue. Over 1,000 customers, 4.4 million users. Market cap peaked above $1.5 billion. Then, on Reddit, investors were already asking the question you'd ask. It has a 100% buy rating and massive upside potential. It also faces class action lawsuits for securities fraud. How can this situation be logical? That question had an answer. Nobody wanted to hear it. Here's what Wall Street missed. Almost all of iLearningEngines' revenue ran through one entity. Not a customer, one technology partner. This partner controlled roughly 90% of the company's revenue. It handled nearly all of the company's costs. Before the SPAC merger that put them on NASDAQ, the company had just $800,000 in cash. They carried $22 million in debt. They rang that bell broke. A research firm found the partner's name, Experion Technologies, registered in Dubai. They found a website. They opened the contact page. There was a US address listed for Experion Americas. It wasn't a glass office. It was a house. Brick walls, a driveway, a minivan. Web archives showed that address belonged to the CEO of iLearningEngines. His personal home in Potomac, Maryland, listed as the U.S. office of the entity generating almost all his revenue. The company's biggest customer lived in his driveway. Court records showed more overlap. An iLearningEngines president had been CEO and director of Experion. 2 iLearning managers appeared as Experion directors and shareholders. A close family member held Experion shares. The people sending the invoices knew the people cashing them. When the SEC asked in writing, "Is this partner related to you?" the company said, "No." But prosecutors say that no was a lie. Here's how the machine worked. Money you borrow has to be paid back. Money you earn proves your business is real. Prosecutors say iLearningEngines took borrowed money and dressed it up as earnings. Lenders and investors wired in over $100 million. The company sent those funds to partners and customers, tech fees, contracts, services. Prosecutors say many of these deals were fake. Those same entities sent money back to iLearningEngines, now labeled customer payments and AI license fees. Same dollars, new label. Those inflows hit the books as revenue. They appeared in SEC filings. Auditors signed off. Investors saw $421 million and thought, this is a real business. According to the indictment, $144 million made this loop, out, around, and back in. That's the part nobody talks about. iLearningEngines reported $138 million in India revenue for 2022. Actual India revenue that year? $853,471. That's a 99.4% fabrication in one country in 1 year. Hindenburg Research called it exactly what it was, an artificial intelligence SPAC with artificial partners and artificial revenue. They weren't getting paid by customers. They were paying themselves to look like they had customers. Quick break. Fully automated trading system from MetaTrader 4, scanning 24/7. High probability setups, zero emotion, zero hesitation. Your broker, your capital, your risk. The system executes, you stay in control. No charts, no second guessing, just disciplined execution every session. Link in the description, code MARKETUNCUT10 for 10% off. Because what iLearningEngines did after getting caught is the part that should make your jaw drop.
August 29th, 2024. A short seller report hits the internet. It names the technology partner, questions the revenue, shows that Maryland house. The stock drops more than 50% in one day. The company pushes back immediately. The CEO calls the report misleading statements, speculations, and innuendos. 12 days later, a Wall Street analyst at Benchmark says the CEO has issued a comprehensive, credible response. Then, 3 months later, December, CEO resigned, CFO resigned. The company files for bankruptcy. In 2025, it converts from Chapter 11 to Chapter 7 liquidation. Meanwhile, bankruptcy records show the wires kept moving after the world knew. In the year before bankruptcy, roughly 50 wire transfers sent over £87 million to Experion Middle East. More than 55 million of that moved out after the short seller report, after investors knew, after regulators started asking questions. The loop kept running. After those resignations, payments from key entities to iLearningEngines stopped. No more wires, no more loop, no more revenue. If the business was real, customers would keep paying. They didn't. 2 Aprils, same date. 1. A bell. 2. An indictment, 10 counts, securities fraud, wire fraud. A continuing financial crimes enterprise. Prosecutors' words for a fraud that ran like a company. More than 90% of $421 million in revenue allegedly fabricated. $144 million in a circle. The CEO collected stock worth over $500 million during the scheme. The CFO collected millions more. The numbers that made this possible: huge AI revenue, huge AI valuation. The market still rewards those same numbers today. That investor from Act 1 didn't lose money because they were careless. They lost it because an analyst called a fraud credible. Because every gatekeeper in the system treated a money loop like a business until the day it couldn't anymore. Here's the one lens to keep. If a company routes almost all its revenue through one partner, ask who that partner is. If that partner's address is a house and insiders collect $500 million in stock, that's not a business. That's a reflection. The Department of Justice said it better than anyone. While the defendants pitched iLearning as a way to revolutionize training and education through AI, the truly artificial part of the defendant's story was iLearning's customers and revenues. They called it artificial intelligence. The intelligence was real. The revenue wasn't.